What are the downsides of tax loss harvesting?
So tax loss harvesting is where, let's say at the end of the year, you'd go into your portfolio. If you have something at a loss, you'd sell it so you can gather that loss. And so you can use that loss against gains.
Hmm.
And you can use it against future gains. So it's sort of like having money in the bank, and so that way, if I have something in the future that I want to sell that's at a gain, like, let's say a lot of people have Apple, right? There's
Hmm.
a lot of questions around Apple right now. And obviously, the tariff situation is really tough, and what's happening, and their manufacturing is mostly in China. They're trying to move it. They don't have Steve Jobs anymore, right, to
Hmm.
do all this innovation. And but if you have this huge gain in Apple, well, okay. So if you had some losses someplace else and you wanted to pare down your position in Apple, you could take those losses and then offset it with the gain. Um, but there's a couple disadvantages. Number one, of course, is that if you happen to want to buy that security back because you really do like it, it's down right now. I just want to capture that loss and put it in my loss bank, so to speak. You have to wait 31 days to avoid what's called a wash rule.
Hmm.
And so, because otherwise it negates your loss.
Yeah.
It's like you never sold it, and so it can create all kinds of problems. And so, maybe that security that you do want to buy goes up a bunch in that 31-day period. So that's always a risk. Not everybody wants to buy the back, whatever. But if you did, that's one of the risks as far as that goes, right?
Yeah. You could be buying back as a higher price than you sold out.
Yeah, if it's high enough price, it could negate the advantage of the write-off, theoretically. So yeah. Uh, you know, Also, you're kind of, you're lowering your overall cost basis,
Yeah, you're pushing off cost basis. So let's say you sell a stock and you buy it back basically at the same price. Your cost basis now is lower for whatever loss you had.
right.
And so if you ever decide in the future that you need to sell it, you have more potential gains.
Yeah, exactly.
You can avoid that with step up. If you're in a certain situation and you're old enough, step up is always a key possibility, and so that's one
Yeah,
way.
so step up is when somebody dies that's one of the owners or the owner. The Whoever the owner, whoever's left as ownership or whoever the beneficiaries are, they get to step up the value of the cost basis to current price. So if I bought a stock at $1 and it's worth $10 and I inherit that stock, I can now set the cost basis at $10.
Yeah.
And I could theoretically turn around and sell it and avoid what would have been a $9 gain to the original owner.
Mhm.
So the problem with step up is somebody has to die, and if you're the one waiting for step up, well, you're not going to get it because it could be a spouse or you can inherit it from some other avenue. And step up's a really powerful way, but it is some portion of the consideration longer term. I can take these losses and take these losses because I'm never going to sell the stuff. Wait until pass away, and then my kids would get
Yeah.
it with a step up, right? So
So you have to think about needs too.
yeah,
Will I ever need this asset?
right,
Is deferring the gains a good idea?
right,
Also, you can think about, you're able to offset gains, but like, let's say you're in a zero, depending on your capital gains rate for the year. If you're on a low capital gains year,
right.
maybe are should you be offsetting this year?
Yeah, you can carry them forward, which is nice. But the I think the step up is really kind of fascinating, right? I mean, just a little bit off topic, but
Mm.
it's still I wonder what the amount of trillions of dollars are sitting there waiting, right? We see it within our practice, right? People have these highly appreciated stocks. They don't want to sell them. Homes that aren't being sold, between homes and highly appreciated stocks. I wonder how much is sitting there. And a lot of times it's an underperforming asset, and it's why you might want to sell it.
Yeah, a lot of times houses, especially with couples, is they're not sold until one
Right,
partner passes away.
right. Even if they need to. I mean, it's a really fascinating thing, how much the step up can impact things. And, you wonder if there'd be more velocity of movement of different things, housing and some of these stocks if you didn't have the step up. But anyway,